numbers that got reported from Info Edge. They reported a loss in the third quarter. The loss was made on account of associates and JVS. Margins, however, have improved owing to lower other expenses. Let's discuss the quarter gone by with Mr. Chintan Thakkar. He is the CFO of the company. Mr. Thakkar, thanks very much for taking out the time. Let's talk about Info Edge's quarter gone by, and give us a rain check on how things stand operationally.
Yeah, so let's talk about the standalone Info Edge company, which is the four verticals: education, matrimony, real estate, and recruitment. Right? So as a standalone, I think the overall the quarter has been good. The revenues have grown around 14%. The billings are up by about 10%. But when you take vertical by vertical, I think Jeevan Sathi was highlight. It grew about billings grew about 27%. While recruitment was kind of is facing a little bit of slowdown, and it was in high single digit number, 8.5% kind of a growth rate over there. From the operating margin standpoint, I think operating expenses have also gone down, particularly on the little bit on the marketing side. We have been a bit flattish, YOY, and because of that, the margins have gone up. So I think YOY the margins have operating margins have gone up by 27%. So overall, I think it's a great quarter. A little bit mixed because there was a little impact of slowdown on the recruitment billing number. But on the whole, I think the numbers are very encouraging.
Recruitment billings, particularly, Mr. Thakkar, do you feel that you could see growth rates of about 26-27%, which we have seen for Info Edge in the past, and off late that has started to come off? Do you feel like you could reach those levels again?
Look, I think there is an economy within which we play, right? So we can't be insulated from what's going around us. We have been bucking the trend past 2 or 3 quarters. But at the same time, as I said, that we can't be 100% insulated. So there is a little bit of impact of that. So I think it depends on how the overall market is and how the growth rates are. If we start growing back to a higher GDP growth, there is no reason why it shouldn't grow to that level, because there's nothing else that has shifted. If you in fact see from the competitive landscape perspective, in fact we would have improved from where we were. So I'm sure this is a cyclical moment, and maybe this quarter, maybe a quarter after that, or whenever it kind of it comes back. And I'm sure the overall inherent the growth potential is very much intact.
And this is particularly obviously on the bulk of the IT hirings and what's been happening in the BPO industry as a whole. But just let me also talk about the real estate side of the business, and then we'll come to the main topic, which is Zomato and the burn rate there, and the fact that when we recently spoke to you on the acquisition of Uber Eats, you guys were very optimistic that this is going to be the big turn for Zomato as well. But let's talk about the other business verticals first and how they've performed.
Okay. Yep. So real estate, the billings have grown around 11%, which is fairly good given how the overall real estate market seems to be. And I think our marketing spend is kind of flattish, and there's about 2 crore and 2.5 crore kind of a cash burn. So we are kind of a break-even business right now. Chugging along well. Previous quarters were kind of a little better than this. But as I said, that overall environment is kind of sluggish for real estate market. But I think 11% is a decent growth. Yeah, so we are happy with with the numbers that we have got. Education business has been again growing at 11-12%, and it's a break-even business. I think it's a similar kind of a growth rate that we have seen in the past. So I think that's I think that's very steady. As I said, Jeevan Sathi I think has been kind of we have been investing and we have been pursuing a particular strategy for our growth over there, because we are in that segment we are number 3, right? So we are a challenger brand, and I think our strategy has been working out well. Last year we have kind of been growing a lot more on volume rather than on value. This quarter we have seen a good growth in value as well as volume. So from value standpoint, the billings have grown up by 27%, and that's extremely satisfying growth for us.
Mr. Thakkar, the revenue growth rate, as you yourself said, the last 5 quarters has seen a significant slowdown. So is it only the economy or the high base as well? Or would you reckon that if the economy picks up, the console revenue growth rate number can pick up from where it is right now at the end of quarter 3?
Yeah, no, I'm sure there is a base effect, but that's, we are always talking about YOY growth, so obviously there is some base effect of that. But why the growth rates are kind of little slower? Of course, it's growing, but it's growing a little slower. There is an impact of what's happening out there in the economy, and there is definitely, that's one of the key reasons for the kind of revenue numbers that that what you are seeing. If it has to improve from here on, as I said that. The basic value proposition is intact. The competitive landscape, in fact, probably we are improving in each of the verticals. So I'm sure the growth can go back to what we have seen in the past. Probably even better than that.
Okay, one more question from my end. Different companies do different things. Tough times, you may spend more to gain market share, or you may spend less and improve margins. Over the course of the next 3 or 4 quarters, if indeed things don't change materially on the economic side, would you spend more to gain market share, or would you try and preserve margins?
Yeah, I think if you really look at our track records, that every time there has been a kind of a bit slowdown, we have actually consolidated our position and we have kind of always emerged much more stronger, and that is because we continue to invest in what we believe the long-term, the long-term investment that is required in business, right? So even in this quarter, if you really see that our investment, behind, tech, platform, content, in general, around people, even if you look at our headcount, I think all has been growing, right? So we are not slowing down in terms of our investment plan. Yeah, there could be a little bit tweaking around how much you spend in marketing and in branding and all that, in line with how the market is reacting to it. But the underlying the theme for us would be that we will continue to invest. The cyclical changes in the business will happen. The inherent strength of the businesses that we are in, the internet as a channel, I think they are all kind of these are all positive factors for us, and we are here for a very long term. So we would not cut down anything. We would continue to invest behind our people.
Right. Mr. Thakkar, let's talk about Zomato then. And last quarter, you had said that the cash burn had fallen from $45 million in March 2019 to $20 million in September 2019. What's the burn for Zomato in this quarter?
It's kind of trending southwards, and I don't have the actual number, right now, but it's definitely lower than 20. And also, just to add to to our last conversation, that Uber Eats acquisition is kind of going well. A lot of Uber Eats business is also kind of getting translated on the Zomato platform. In fact, whatever we had expected, it's doing a bit better than that. So we are extremely kind of happy with with the past trend in terms of the volume as well as in terms of what the cash burn is. Also, Ant Financials, we announced that Ant Financials have agreed to come and fund more money into the company. So these are all very, very positive trends.